I'm Nick Sean. For most of my trading career, I've been a swing trader. I've dabbled in the lower time frames and played around with them with varying results. This video is a swing trader's case for trading the lower time frames. How to trade the lower time frames, but in a logical way. Something very interesting that I found is that whenever I'm trading higher time frames, I have a win rate that is somewhere between 55% to 90%. It really just depends on the little smidge of time that you take to calculate what my win rate is, but it's just slightly above 50%. I'm personally just going to say maybe it's 55 to 60%. That's what I'm going to leave it at. But it may be higher, it may be lower, depending on whether I'm on a win streak or a losing streak. What I found was so interesting is when I went to the lower time frames to model my same trading approach, which, let me tell you my whole trading approach. You know what it is? Buy when I think it's going up and sell when I think it's going down, and using a risk structure that reflects my risk tolerance and is structured in an appropriate way for whatever I'm optimizing for. So for instance, sometimes I'll use DCA trading. I used to use hedging. I don't use that anymore because I can't. I'm with a US broker, Forex.com. You can't hedge here in the United States. Grid trading, sort of adding in with a little multiplier, so a pseudo martingale approach, using stop losses, all sorts of stuff, right? So I've modeled my trading approach in a lower time frame. And last week in the MFX Nick's Trades group, a monthly subscription paid group where I just call all my personal trades that I take, I started calling day trades, and the results were very interesting. So let me just go ahead and show you from where I started it. So I started it as an experiment. I'm going to do this till like maybe end of January, see where it goes. So far, we're off to a good start. But here was one of the first trades I called. Each of these trades is $250 risk on a $50,000 account, and it's everything's live. This is a live account, so it's $250 risk. That was the first trade I took. GBP AUD. This was the second trade that I took. It was a buy on USDJPY. USDJPY hit the stop loss, and so what I've done is I've done this really interesting thing right here, where I show an update whenever like it's a stop loss or take profit is triggered, and I show what the result was for that trade. And then I also show the cumulative P&L. Sometimes it's really hard to track my P&L because of risking different amounts per trade. For example, if you track my P&L for this whole year since I've been running the Nick's Trades group, I'm up about $44,000. And the way I got this was subtracting like a little over $180,000 from a little under $140,000. I think I made like $183,000 on my win streak earlier this year. And then I went through like a break-even streak, and then a losing streak, and then a win streak, and then another lose streak. And then we're here to the end of this year where I'm getting back on a win streak, this past week or two. And so when you calculate the P&L, it's about $44,000, but there's not really like a trade-to-trade thing to track it cumulatively, right? You have to do the math, and you have to scroll all the way back to the beginning of the group to be able to track the stats. If you're in the Nick's Trades group right here, you could see the 2024 history. You can see all of the results from all of 2024 since I started this Nick's Trades group. So you can actually scroll back in there. You can see all that for yourself. But as we come here into 2025, I've started doing this. So I show the cumulative P&L right afterwards. So we'll see how this goes. Maybe I'll go back to just swing trading in January, at the end of January. But maybe day trading works out good too. My intention is that assuming day trading works out, meaning just like trading the lower time frames, that I'll kind of do both. So that way there's plenty of trades to be taken with low risk, but then really good swing trades I can be really patient for and wait. So that way, like, I don't get angsty waiting like a whole month and there's like no trades to take. And then also there's people in my group like paying me monthly to trade, and they're like, oh wow, I also subscribed to Nick for a whole month. He didn't call one trade. And that's going to totally happen. That happened earlier this year too. There was 3 weeks I didn't call a single trade. This is when my win rate was like over 90%, but I was being very selective. There was like 3 weeks where I didn't call a single trade. But that can get around because now that there's day trades and swing trades, it means that there's always something going on in the Nick's Trades group. There's virtually a trade every single day. So that was the first trade. It was a stop loss, and the cumulative P&L was -1R. This one, GBP AUD, this one hit the profit target. So what I'll generally do is I'm showing that this is how I call trades. I just post a screenshot of my actual terminal. A lot of people, whenever they call trades, like I've just seen this, like I've been trading for almost a decade now, right? For like almost 9 years. So I've seen a lot of people who run like signals groups, trading groups, where they call it, I don't call my group a signals group. I just call it Nick's Trades because I just post my personal trades that I'm actually taking. I see a lot of people just put like buy XAU USD, stop loss here, take profit here. And they've got like 4 or 5 take profit levels or something stupid. And you have no clue what they're actually doing. I hate that. I can't stand to look at that. So that's why what I do is I just literally show my trading terminal P&L, and I show the actual chart with my actual entries and the position sizes and everything. What I'm doing for position sizing is, since each trade is about $250 risk, I start it with a 0.1 lot size, and MetaTrader 5 allows me to drag the stop loss and take profit in place. And then I can see how much risk it is. So say, for example, if I enter a 0.1 and I drag the stop loss in place and it's the $25 risk, I know my position size needs to be 10 times what it is. So if I start with a 0.1, that means I would add a 0.9. That would magnify the risk and bring it up to $250 for the trade. So that's why you'll generally see me, like, there's two trades. There's 1.1 and then there's another one right after I figure out what the risk is. This means I don't have to go like use a position size calculator and then I have to like do some math calculation. I'm trying to I don't have to do like a math calculation type of thing, man. And then I don't have to like go and do, and then I have to call the trade out, obviously, and write it out. There's no latency, right? It's like I take the trade, and as soon as it's there, I just screenshot it and post it in the Discord group. And if you're in here, you usually have notifications on for these, so that way you're able to to see everything. So that's what I did for this one. So I had that UJ hit the stop loss, GBP AUD hit the take profit. This was here's the account, here's the funding. I funded this like 2 weeks. What is this? 2 weeks ago. I guess they give me an interest payment. Anyway, here's the trade. So for up until this point in the week. So it was break even, right? There was that one loss. There was this one win. So GC hit the take profit for 1R, and then it was +0 for the cumulative P&L. Then we get another trade 2 days ago. It's a USD JPY trade. Now, I'm sure you know what you're thinking. You might be like, how are you going about trading this? I'm going to show you on the trading view charts, actually, like right here in just a second. This is just me showing you like what I actually did. Because a lot of people go into like the theory. They're like, in theory, it's this way. I do this as well. I go into the trading view replay mode and I show like, okay, here's candle by candle, just because that's a good way to teach. I believe the best way though to learn and the best way to teach is just to do it live. This is one thing that most people are not doing, just like doing everything live. I've been trading live in the Telegram channel for like 6 years. It's a free Telegram channel. I just post some analysis in there. I'm not like crazy active in there anymore, but I still post my analysis. There's just not much to post, right? Because when you're posting swing trading analysis, it takes time for the swing trades to set up. So it's not, I can't have this whole like song and dance that I'm doing every single day. Hey guys, we're still waiting on AUD USD to go down here so that we can buy. And it's like been 2 weeks since we've been waiting. But the free Telegram channel link, it's the first link in the description if you're new to the channel. And if you're already here, cool. If you like this video, great. That's awesome. I'm glad you liked the video. So USD JPY, I sold here thinking that price would go into this zone. And this is kind of how I called it out. So that was 7:25 a.m. Look, 11 minutes later, it just went down and hit the take profit. So then what I did is I did this little update here. UJ take profit +1R, cumulative P&L +1R. And then this was another one that I took. It was a Euro USD trade. I'm using lower time frames. So I know it says here on the 1 hour chart, sometimes that's just like the best way to show like visually where the entry and stop loss and take profit is. So what I'm doing here is like it'll show the 1 hour. What I'm personally doing is I'm using the 1 hour, the 15 minute, the 5 minute. Occasionally I look at the 1 minute. I'm not quite sure how useful I find the 1 minute chart. I think 5 and 15 is kind of the sweet spot if I'm going to be trading lower time frames. But I'll still use the 1 hour chart too, just because, I don't know, it's kind of cool to look at how the candles close, because you could have like a whole story being painted. Like the 1 hour candle closes bearish, and then on the lower time frames, you've got like it bangs into a support zone 2 or 3 times and it looks like it's going to break the support zone. It's just a lot of intuition, right? You just can't quite put it into words once you get enough experience. There is no strategy. It's no black and white strategy. Like this happens in the trend pullback, it goes here. There's none of that, right? It's literally just like all your experience looking at the chart, visually deciphering and determining what the price action is and what you think the best decision should be. Like whether to not do anything, which is the case most of the time, or whether to buy or sell, and then where to put your invalidation or stop loss at. So I sold here on Euro USD. That was like a little downtrend. This is what ended up happening. It ended up going down to the zone, and this was how long? And by the way, this is how I do it, right? I call out the trade with a screenshot, and then as soon as the trade is complete, whether it's a stop loss or a take profit, as soon as I see it, right? As soon as I check my phone and see, oh, an hour ago this one hit the stop loss, then I post it, when I see it. So what you'll see if you're in here in the Nick's Trades group, you'll see this right here. You'll see the screenshot for the entry. And then you will see the screenshot for the exit, and you'll also see what happened. So like this was like Euro USD TP 1R. I try to keep it super simple. That way it's easy to follow. And the cumulative P&L of +2R. So This ensures it's simple. Like this is the whole everything for the whole trade, right? And what's cool is that there's virtually like no latency. Like I call the trade out, like from the moment I actually physically place the trade on my phone to the moment the trade gets called out is, I'm gonna say maybe like less than 10 seconds, right? Because I'm on MetaTrader on my phone. The trade is placed. Screenshot it. I swipe out of MetaTrader, click Discord, click the next trades group, and just like upload the screenshot. So it's about 10 seconds, right? So instead of it taking like a whole minute and then people like miss entries or whatever, the latency is just a few seconds usually. And then people can get that alert. And then if they want to take the trade as well, right? You know, after doing their own analysis and all that or whatever, if they see, oh, Nick's in that, they know every trade's risk is $250 for right now. That is going to be magnified at some point, $500, $1,000 risk per trade, and then even more. But for now, everyone knows it's $250 risk per trade. So they know, okay, I can enter the trade. And then they can use whatever position size they want, and they can even set the stop and profit target wherever they want, you know, or they can just mirror what I'm doing if they want to. So, but this makes it nice and easy and clean for people to follow. So that way it's not like super hard, super pain in the ass to follow. This was another one. And again, I just posted a screenshot, right? There's no, I am selling USD JPY with this lot size and this, there's not like a bunch to read, right? People just literally like they get the alert. This was at 6:12 a.m. They get the alert, they look at it, and they just see, okay, Nick is in a sell. There's his stop loss. There's his profit target. And they already know, like, my risk is $250. So there's that. There was another trade I took an hour and a half later, Euro USD, which was also a sell. So I posted this here. People can see the stop loss to take profit. Then what I do is I take that, like, after it concludes, right? This was the Euro USD trade. That one hit the profit target. So I put EU TP +1, cumulative P&L +3R. This one was right here. So I do dynamic stuff too. So that's the cool part, is that I'm finding that as long as I use my discretion on the lower time frames whenever I'm trading them, it works the exact same way as swing trading, right? It just, instead of a trade taking like a month or two to play out, which to be fair, that doesn't happen that much. My average trade duration for swing trading is about 1 to 2 weeks. It's usually not that much. The last trade I took where I lost $30,000 on it after having like a 2.5 month win streak of like $40,000, I lost 30K on USD CAD and like 6K on NZD USD after holding those things for like a month and a half or like maybe a month and 3 weeks. That kind of stuff can happen when you're swing trading, right? And then it could happen like where you're going to trade a month, 2 months even, and then the trade ends at break even, right? Then you've got commissions and fees and spreads and whatever the swaps happen to be. Maybe the swaps murder you and then it's like an extra couple $1,000s of loss. It's one of these things where when you're doing it on the lower time frames, provided you're still able to exercise your discretion in a way that is suitable for those market conditions and that market environment and that trading style, you're able to do it, in my opinion, at a relative consistency to what you'd be able to do in the higher time frames. Riddle me this, right? We're just looking at charts with candlesticks going up or down. You cannot, for the life of you, tell me, if I just show you the candlestick chart, what time frame it is, right? It could be a 1 minute chart, and then it could be a 5 minute chart, and then an hourly, and then a weekly chart. And if I take away the little time frame thing on TradingView where I'm not showing you what chart it is, you have no clue, right? Your brain is still going to default for looking like to what price action is doing, whether or not there's a trend, whether or not there's a range, if price action appears to be like faltering out at a support zone, there's a couple dead cat bounces and it's going sideways, then your brain thinks, okay, it's going to probably break that support zone because it's not bouncing off of it. Those patterns happen like all sort on every single time frame, right? It's just a matter of your average trade duration can be a week or a month, or it can be like an hour or a day. What I find is really cool about this is that with swing trading, my average losing streaks, like say I lose 4 trades in a row, right? It might be 2 weeks, right? Where I'm taking 2 trades a week and I lose 4 trades, and that's a losing streak for 2 weeks long. With this, that losing streak might be 2 days, right? Because I'm obviously going to lose like 4 trades in a row, 5, 6, 7 trades in a row at some point. That's why the risk has to be so small, right? The risk right now, I think, is like 0.5% of the account per trade because it's a 50K account, $250 risk per trade. Again, that's going to be going up, assuming this test goes well, which is just why it's an experiment going into the end of January. And then what the risk will be then probably what I'm thinking is kind of 2%. I think 5% might be a little bit too aggressive because I lose 4 trades in a row. It's 20% down. But 2% I think would be reasonable because I could lose 5 trades in a row and that's 10% of the account. But 10%, I mean, I don't know. In my opinion, that's not that crazy as long as what's in your account is not all your trading capital. I would not put all my trading capital into account and then risk 2% of that per trade. That would be, I don't know. I feel like that would be a little bit too not optimal for me, at least for my emotions. I'm a complete wuss. I couldn't do that. But I'm okay with putting a portion of my trading capital into an account and then risking a percentage of that, knowing that the account is reflective of like an equity stop of my total trading capital. And then I'm also controlling risk for for every single trade on the account as well. So I don't know. It works pretty good. So I'm thinking 2% might be kind of the optimal little run, because if I win 5 trades in a row, I'm up 10%. Right, it's only going to take like 100 to 200 trades to get to the profit target if you're doing like 2% risk and compounding it, getting through kind of win streaks and losing streaks and stuff. So with this, I could lose 4 trades in a row. The whole point of this is that could take 2 days, right? So it's a 2-day losing streak instead of like a 2-week or more losing streak. By simply being able to take more trades, assuming the stats are the same, meaning assuming if I'm right 60% of the time on the higher time frames and 60% of the time on the lower time frames, if those stats are true, and if this is actually real, and if I haven't been deluded by my own back testing and forward testing and all the experience I've got over the past nearly a decade, then it appears as though lower time frames might just be something that allows me to take more trades, get more reps in, and then essentially, I'm just going to say it, grow the accounts quicker. That's it. Because the only way to grow an account quicker using swing trading is if you just generally risk higher amounts per trade. And again, that's okay. You can risk higher percentages per trade, like 5, 10%, especially if your win rate is not 60%. Maybe it's 70%, 75%, something crazy like that. That makes sense to do that. But the thing is, losing streaks are still going to happen. And so it's a matter of like, oh my God, like you get to the end of the month and you've taken 6 trades the whole month and you've lost 4 of them and you've won 2 and you end the month down. And you're like, damn. If you're doing that, but you're just trading more opportunities, right? But you have the same sort of stats, right? 60, 70% win rate. Then it gets to the point where it just happens quicker, right? It's like, yeah, I'm on a losing streak. It was 2 days. Now I'm back on a win streak. And then you're on a win streak for like 2 or 3 days. Then you go on a losing streak for 2 days. And again, the goal here is just to make a little bit more when I'm right versus what I lose when I'm wrong. Of course, that's always been the goal for my whole trading career. And luckily, I come out every single trading year just a little bit on top. And that little bit on top it's something that I think is a reasonable expectation, to not think that you're going to have everything on a huge win streak and you're always going to be doing really good and you're just going to make like $10 million a year. You're going to flip your $1 million account to $10 million every single year. I just don't. I think if you can get to the end of the year and you're making between 10 and 20% on your trading capital, like on total capital, that is phenomenal, right? And again, you don't have to be like a god to do this. You just have to make a little bit more than you're wrong. You just have to barely come out on top, and you're profitable. And when you do this at scale, whether you're doing this with prop funding, which I don't recommend, or whether you're doing this with your own capital, or whether it's an investor capital, so it's like your family or friends or whatever, however you want to structure it. If you can just come a little bit out on top, then that's a very good thing. And almost no one can do that. So it is what it is. So this was the trade I took on USD JPY. I closed that at a partial loss. You can see right here, there's discretion. There's a partial loss here. So the cumulative P&L is plus 2.5R. And then right after that, I entered a buy, thinking that it would go up. Why did I think it would go up? I'll get into more details here in a second, but it's like there's a resistance here. I tried to fall away. There was a resistance here, It found support. It kept clustering up. So just all these higher lows and the fact that it kept testing the resistance over and over, refusing to drop, made me think it was going to go up. So it did actually go up a little bit, but when it went up a little bit, then started to come back. This was getting close to market close on Friday. This was a couple hours away from market close. So this was 11:53. Markets closes at 4 p.m. my time. So this was about 4 hours from market close. And I just decided to close it right there, thinking that, okay, it's probably not going to do anything today. And I turned out to be right, because USD JPY literally did nothing for the rest of the day Friday. When I closed right there, it just went sideways all day. It actually went down a little bit. So I would have closed around like almost exactly break even, or maybe a tiny loss. But I ended up closing right here. It was a break even. I called it a break even. It was actually a small profit, but I just called it a break even because it was so close to the entry. And the cumulative P&L remains at 2.5R. But this is really cool because it means that whenever you join, like, right, you could see the cumulative P&L too. One thing that has really sucked, especially with swing trading with my model, right? My business model relies on the fact that I'm going to make more than I lose long term, and that when people come, it sucks because they might join on a month where things are just barely profitable or losing or break even, right? Or we're just waiting for some trades to play out and we're in a swing trade that we've been in for like, the past 2 weeks and someone just joins. This is really cool because this mitigates all of that, right? Like none of that even matters, because if someone joins and they join right on a losing streak, right? Someone could join right when the next win streak is about to happen. And that could take over the course of a couple of days to a week or two of just a win streak. Someone could also join like right when we've had a huge win streak, right? They see me I'm bragging about a huge win streak. I'm like, yeah, we're up like 5R the past week. And then the week before that, we were up 3R. So we're up like 8R. And then this week, we're already up 1R. And then people are just like, oh, wow, it's going amazing. Then they join. And then the moment they join, I go on like a 4-trade losing streak. The problem with swing trading and then running a business like my business model is, which is where people are just literally paying me to follow my trades, whether they're taking them or whether they're just learning from them or whether they're just there for like the live group sessions, because I start live Zoom sessions a couple times a week if people are in the Nick's Trades group. That way people can get on and ask me questions. It's like a Q&A type thing. We'll look at charts together, whatever. We'll just pretty much, I'll help them with whatever they want. People will all hop on the call. And whatever they're there for, many people are there because they just want to see what I'm actually doing. And the hard part about my business model with swing trading is that the stats take time to play out, right? There can be times where like 2 to 4 months out of the year are like down months, right? Then you could have 2 break-even months per year. You could have an amazing year like I did in 2022 where every single month was profitable. And that's great. Whenever you get that, you could have like 2023 for me where I was like down 4 months, 4.5 months. I think it was a little over 4 months out of 2023. And then this year, right, there's been like 5 months where I've just been like either down or break even, or just sitting in like trades like as they float, waiting for them to play out. It's harder to do my business model whenever like it relies on swing trading, and it just sucks. Like people could join, right? They missed the huge win streak that I just had. They join right whenever like a losing streak or a break-even period occurs, and they're there for 1 month and they're like, oh, this sucks. This is stupid, this and that. But then the long-term stats never have time to play out, right? People who were in the Nick's Trades group from the beginning of this year are sitting in profit currently at the end of this year. It's not the profit that I normally make per year, right? But it is still a profitable year, and that's good. And then it's also next year's looking amazing as well now that I've got my broker situation sorted out. And so what is truly amazing is that with more trading opportunities, aka trading the lower time frames, it allows those equity curves to play out at a much quicker rate as compared to like 2 trades per week on average, which is what I average, like 1 to 3 trades per week, I'll say. But let's just say 2 trades per week, right? That's 8 trades per month. That could be a month where it's like 4 winning trades and 4 losing trades, and you get to the end of the month and it's break even, and then someone decides, this is it. I'm just going to stop following Nick because Nick sucks. It's one of these things where it's you can't look at just 1 week of data, 1 month of data, or even a couple months of data. You have to look at the long term. With long term, you just need like many trades, like many different trading opportunities to look at. This allows it to just be a lot of trading opportunities every single, like usually at least 1 per day. I'm not going to say that because there might be a day where there's a lot of news or it's a holiday and there's nothing to trade. But let's just say like every week there's multiple trades per week, right? So you get to the end of the month, there may be anywhere from like 15, 20, 30 trading opportunities that were taken throughout the course of their month. Even if it's just 1 trading opportunity per day, which I'm almost positive is going to be more than 1 trading opportunity per day. So let me just be more realistic here. I think there's going to be about 2 trading opportunities per day or more. If that's 2 per day, that's 10 per week, that's 40 per month, right? That allows losing streaks of like 4 or 5 trades in a row to happen. That also allows winning streaks to happen of like 4 or 5 trades in a row where like you're getting multiple trades in quick succession. And this is not even to count all the opportunities that could just end at break even or like a partial loss, because I have that kind of discretion and that nuanced sort of experience to be able to make those calls and to avoid losses. Whereas otherwise they would hit the stop loss or something. I can avoid that, right? I can close at partial loss, or I can like take a break even on it if it doesn't look right to me. All these things are coming together. So it's really cool. So this was a swing trader's case for trading the lower time frames. From my modeling this and back testing and looking at all the trades I could have taken and using my trading approach, which is just a super intuitive, it's not even a strategy, right? It's just me looking at the charts and saying, this price action, the way this looks, I feel like this is going to go down from here. And then I'm exercising that, and that's just built up over years of experience. It means more trading opportunities, more trades to take, and then the duration of time that it takes for losing streaks and win streaks to play out is much less. So this is a swing trader's case for trading lower time frames. I like it because it means that there's more trading opportunities and things can just play out much quicker. I'm also going to say that adjacent to this, I'm always going to be doing swing trading as well, because there are setups, like I truly believe that if I'm able to execute a trade with appropriate to my risk parameters and everything, even if I'm using a stop loss, the win rate is over 50%, right? It may be over 60%, but I'm not going to say, I'm just say that. I'm just going to say let's just say it's 60%. Even if it's just 60%, I can get into those trades. I can monitor them. I can close early if I want. And then while the swing trades are running in the background, there can be multiple day trades, right? So there's just more trading opportunities. The equity curve can be a lot smoother, right? Instead of these huge like win streaks and then losing streaks and then break even periods and then a huge win streak and then a huge losing streak and then a break even and then a win streak. It's just like the equity curve is so zigzaggy throughout the year. But with this, I think it'll make it a lot more smoother, a lot more smoothed out, because each individual trade won't really have too much of an impact on the overall P&L, because the risk will be lower per trade, but there'll be more trading opportunities. So there won't be these like crazy win streaks or losing streaks, and there won't be any blown accounts. What I would do with DCA, when I was using DCA and grid trading, which I think I'm still going to use like a variation of it, right? Depending on what the trading opportunity is. When I'm using those, I just deposit into the account what I'm comfortable losing, right? So the account functions as a stop loss. So if I deposit, say, 5 or 10% of my trading capital into an account, I'm effectively risking 5 to 10% of my trading capital if the account blows. But how likely is the account to blow, right? You know, for the most part, unlikely. Like there's more than a 50% chance it's going to grow to the growth target. And then there's some percentage chance lower than 50% that the account will blow on a losing streak whenever you get into multiple trades that keeps going against me. That was the way I was able to make that function. The way I'm going to do this now is still kind of doing that, but with an equity stop. So this way it like prevents an account from being blown. So that way the people that are following it have a way to do that with their trading capital while still structuring the risk in an appropriate way that reflects their risk tolerance. So that way they don't lose too much money, because that's the whole thing, right? You just don't lose all your trading capital. If you can just do that, then you can have enough time to build experience and then maybe even make a little bit of money if you wind up in the 10% of people that actually end up becoming profitable after a couple of years. So with that, I hope this video was useful. This is me experimenting with lower time frames. If you made it to the end of this video, somebody suggested I do this last time. Type the number 74 in the comments. Just randomly, just put 74 first. And then after that, say whatever you want, and then you can ask a question or whatever. And then within the first 24 hours, I'll try to do my best to make sure that I respond to all of you who made it here to the end of this video, because you guys are the ones that I want to be here to serve. You guys are the ones here that I want to answer questions for. You guys are the ones that I want to be able to deliver more value for. So yeah, if you made it to the end of the video, type 74 in the comments and then ask your question. And if you want to like the video, you can do that too. Cool. So thanks for watching. I'll see you in the next one. Cheers.